Happy Friday, everyone. We have a bullish look in the markets. We do have a huge week next week, though, and that's probably going to cause us to have at least a little bit of caution. So we're going to take a look at the charts to see what they're showing. We'll also take a look at the catalysts that we have coming up, the things that we have to pay attention to, and I'll also share a couple stocks with you as well that I've been tracking and the opportunities that I think are lying there waiting for us, assuming that everything continues to go as it's currently going, as the charts are showing. Like I said, next week's a big week though, so let's actually talk about those catalysts first, and then we'll get into the charts. Today, Michigan consumer sentiment at 10. We already know that it came in low midway through the month, and so it probably won't be a lot different than what we saw. As a matter of fact, it might even recover a little bit. We'll see as 10 o'clock comes around. On Monday, Dallas Fed, it's been a contraction for a while now, more contraction. Not necessarily that big of news unless it's highly negative. So we'll move on from there into Tuesday, because on Tuesday at 10 a.m. is when we have JOLTS. That's the first huge catalyst that we have coming up next week. 10 a.m. Tuesday, April 29th. It's also the last day that we get the Atlanta Fed GDP Now numbers for Q1 before the official advanced estimate comes out on Wednesday, the 30th. And so that takes us to the next major catalyst, and that's GDP itself. Right now, the consensus estimate as per Trading Economics says 0.4%. Atlanta Fed GDP Now said at negative 0.4% for a gold adjusted value, and I believe it was somewhere, I want to say like negative 2.5%. And I've said this before in terms of catalysts, 2 quarters of negative GDP would be that sign of recession. So if we get negative from the GDP advanced estimate for Q1 and the Atlanta Fed GDP Now numbers that come out as well on that same day, on April the 30th, that would be that story that would be like, oh my gosh, maybe recession is here. So that could be something that actually the market hesitates on. It could happen today. We could sell down today. Maybe we hit a nice high peak today, and then next week we start to pull the rug. We're going to have to watch and see. It's still anybody's call. Like I said, I'll share the charts with you. I'll show you what I'm seeing on those. But I will say that next week has big enough catalyst between what we see for the labor market for JOLTS and what we see for GDP, especially in reference to recession and what the Atlanta Fed has been saying. If we go negative, I think the market sells. Negative for Q1 advanced estimate, negative from Atlanta Fed GDP Now for Q2 for their initial numbers. If we see positive, I think some downward pressure comes off the markets, especially if it beats expectations. We want to be watchful for that, for the advanced estimate for Q1, that if we see those numbers end up in that positive area, that we don't see economic contraction, that we just see slower growth, I think some of the worry comes off the markets, and especially we'll see what Q2 numbers come out as well. If we see positive, negative, it's not necessarily as bad as negative. It could just tell us that maybe something worse is coming for us, that we haven't quite seen it yet. So I think best case scenario, positive. Worst case scenario, negative. We're going to have to watch and see how it turns out. So we also get personal income and outlays that day. So hopefully we get some subdued inflation numbers. We don't necessarily want to see them turn negative on us, because that could signal deflation, which could go along with the whole recessionary side of things. I don't think we're going to see that deflationary environment yet. So, if we see it at all. But that is something that we're watching for. We want subdued inflation to happen. We don't want it to keep seeing it end up with these higher numbers that we could have. Personal income being up is a good thing, by the way. For the core PCE month-over-month numbers, if we come in around that 0.1, I would say flat to 0.3. I think anywhere in there, we're probably okay. We definitely don't want to see that spike back up on us either. Personal spending, we want to see that staying robust as well. So income and spending up, inflation subdued. That would be an excellent combo for watching that come out. On Thursday, we have ISM manufacturing numbers at 10 a.m. We also have initial jobless claims at 8:30 a.m. And then the next big thing that we're looking for after GDP, after ISM, is non-farm payrolls and unemployment rate on Friday. So really, the whole thing could build up when we see the JOLTS on Tuesday, could trickle into GDP, which could trickle into a non-farm and the unemployment rate. It really depends on how those numbers play out for what we see for those catalysts that we have. Plus, don't forget that we also have big earnings next week, such as Meta, Microsoft. Caterpillar is going to be a big one for U.S. infrastructure in terms of construction, and seeing what's going on there and what they're forecasting. If Caterpillar comes out and they say that there's not a lot of orders coming their way, that we're seeing subdued growth from them, subdued expansion, or maybe even a little bit of contraction from them, that can be a negative signal. But we do want to watch out for something like that with those earnings as well. I don't want to discount them from the catalyst for next week. But for next week, we want to see stable labor market or even improving labor market conditions. We want to see strong GDP numbers, and we want to see subdued inflation. Those are the things that we're going to keep our fingers crossed and that we're going to hope for. But I do think that the market could be a little bit worried leading up to it. So we could see that hesitation happen in the market. We could see some downward pressure happen in the market, or we could see it rise up cautiously and just keep on going the direction it's going unless we get bad news, and then it could snap on us. So when I said anybody's guess, next week's just a huge, tangled, messy week, and I don't want to try and project it out before the week hits. We'll know more on Monday when it rolls around, leading up to how we position ourselves for Tuesday, Wednesday, Thursday, Friday. It's just boom, 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 one right after another. Catalyst, just all throughout next week. It's a literal minefield of catalysts. So with that said, let's get into the charts to see what else we can see for what's currently going on and where we could expect to go from here. So the first thing we're going to kick things off with is QQQ, and we're going to move on in the charts. We'll take down some of these technicals. I talked about them in yesterday's video. You can go and see them. Let me just tell you what we're seeing in terms of moving averages. So let's go with the first round of moving averages here. We'll first go with the simple moving averages. We're above the 20. I said that was the first sign of bullishness. Good. We're also up above the 50 for the RSI. That's the momentum indicator down here. The 50 is down below the 200. The 20 is down below the 50. The fact that 200 down to 50 down to 20, those moving averages that you see coming down across your screen, that's a bearish setup for us. The fact that the price action moved up above the 20 is a good thing. We do need to contend with the 50 that's up above there. We want to see eventual crossing of the faster moving averages over the slower ones. That's a bullish cross, whereas faster down over slower, like we have 50 over the 200 right here, that death cross is a bearish sign for us. Just like 20 over 50, 20 over 200, we want to start to see those reverse and flip back around where you start to see the bullish crosses where you have the faster crossing over the slower ones, and that's something that can signal that further upside is coming our way. So from a momentum standpoint, we're looking in good shape. From being over the 20 near term, that's a good thing. We're still bearish, I believe, on a weekly basis as we look at this, still under 50, but it is rising when we look at the Qs. When we go to a monthly standpoint, where are we? We're still actually in bullish territory when we look at the monthly RSI numbers on here. When we go over to the SPY, once again, we'll take these down and we'll take a look this time with the EMA. It's going to be very similar. So actually, we'll put up the simple moving averages. Then we'll talk about the EMAs. There we go. So once again, up above the 20, the 50 down below the 200. And if I take those down and put up the exponential, this is the 5 and the 13. A very good sign that the 5 has crossed the 13. That's very near-term bullishness for us. The RSI up over 50, also near-term bullishness for us, bullish momentum being there, and having a little bit of a hesitation in the pre-market this morning. We'll see if people are locking in profits or if they're setting up for next week. Be nice to see that rise up to this 50-period EMA that we have that's just above that, which is definitely possible. When we look at the Qs, just to backtrack for a moment, and I put up the EMAs. There we go. On a daily basis, once again, near-term, only talking about it with the EMAs. We have the 5 crossing over the 13. That's a bullish signal. RSI up over 50. We're still down below the 50. We could watch a rejection happen off of that if we do continue that climb today. And for IWM, once again, we have that same cross with the EMAs. We're down below the 50. And if I put up the SMA for you just for a moment, once again above the 20, but we still have the 50 down below the 200. So overall, still looking bearish as per the 200-day moving average. The fact that we're trading below it, so we could get quick climbs and then bigger falls happening from that. But the more that we overtake those moving averages, the more that we start to see incentive for moving upward. It would be nice to see another volume spike in here to see a conviction move to the upside happening for us. But we still have all those things with the labor market. We still have GDP to worry about. I think the market will be sweating a GDP thing pretty darn hard. And then there's always just the daily updates that we get for tariff news that can really hit at any point in time. And when you watch other YouTubers and listen to what they say, they'll say things like, as of the recording of this video, when it relates to tariffs. I know that we say it for other things as well, such as the charts that I have on here. The pre-market's going. Market's going to be live most likely by the time that you see this. So as of the recording of this video, but still tariffs, it changes so rapidly that even daily update videos aren't necessarily fast enough to keep up with the tariff news that's out there. So when we look at Bitcoin, where we at right now, we're trying to take on that 95,000 mark, and we just haven't quite gotten there yet. 95,152 is that number to beat. That's this previous peak that we have over here. 94,700 is the last peak that we had, and right now, where we're sitting at 94,493. So we're trying to take on this. We had some nice volume movement So a lot of conviction in these movements up above resistance. 95, if Bitcoin continues up today, is probably going to make it up to 98,451. That's what I have my eyes on for that next move that we make. If we can get up above that, then we get to take on these previous peaks. So some things to pay attention to in terms of Bitcoin. The momentum might need a little bit of cooling. We'll see that, but given this buying pressure that we're seeing here with these volumes for us, we could get that next move. If we can make it up over 95,000, then like I said, we try at 98.4, then we get to try and take on the all-time high that we had. We really want to get a candle on top of this resistance area that you see up here from 106.6 to 107.2. Getting up a candle on top of that for the first time in Bitcoin history is going to be the signal that we likely have more all-time highs coming in, and probably much higher than what we've most recently seen, going back to what it was about 109,000 or so, 109,356 as it says on here. So some of the stocks that I've been watching for. Now, mind you, I've been sharing this over at the Discord. The link for the Discord is down in the description. I'm over there. There's other panel experts over there as well. You can see our analyses, our technical analyses. You can see our trades. You can have discussions with us. There's an Ask the Expert. Plus, there's the bread bot over there that can signal for you when big moves are about to happen for different stocks, cryptos, you name it, AI charting tools. And then there's also advanced charting tools as well. The products, services, seemingly endless. You guys can get access to it. All of it using the earner tier when you sign up for that Discord access. So go ahead and use that link down in the description. If you guys want to learn to do this yourself with technical analysis, with the bread recipe that trades using that bread recipe trading strategy, options to also add alpha to your portfolio, there's coursework for you down in the description through Stockmo Academy. You can click on that link, sign up using the code word doctor. It's going to save you a ton of cash. Bundle the courses, it's going to save you even more cash on top of it. Then you guys can use this as well as the support that you find over in the Discord with the community that has thousands of members already. Put it all together, you guys got yourself an awesome opportunity to invest in yourself to really start to amplify the power that you have in the stock market. Links are in the description. Let's get back to the charts on this. So what we're looking at right now, this is Big Bear AI, and what we have as per the moving averages that are on here. Let me move that up for you if I can get this to go away and stretch that out just a little bit. There we go. Center of your screen. Here's what we got. Near term, as per the EMAs, we have the 5 crossing over the 13. That's near-term bullishness for us. The RSI still down below 50. Maybe today is where we get that push up above 50. Maybe today is that day that the 5 crosses the 13. We have the 50-period EMA to contend with, which is up above that. If we put the EMAs down for just a second and bring up the simple moving averages instead, we had the 20 cross down over the 200, but just barely. But the price action is moving up above the 200-day. So if we get that bullishness, if we get up above the 200-day, and with that 50 being up above the 200 like we have, that could be a sign that we have further upside coming for this penny stock. And some people really like penny stocks. As a matter of fact, I have another penny stock for you. This one I just was looking at this morning. I'll be updating my technicals over at the Discord. We had some decent volume the last 2 days. The 5 has crossed the 13. And so in the pre-market, up a little bit, we could have another 20% upside to this 50-period EMA moving average that you have coming down here as well. So we have BBAI, we have REKR, REKR is this chart that we're looking at right now. Rigetti from the quantum stocks. This one in its consolidation pattern. Check this out. We just got a higher low put in on the 21st of April. And then when we look at the peaks, we are just hitting right around 973 to 974. That's where that selling pressure comes in. If we can get up on top of 975 with some good volume, we could see some outperformance coming from Rigetti sometime in the near future. And maybe that's that next several dollar movement where we start to see that 10, 15, 20% move to the upside. If I take down the EMAs and put up the SMAs for you, you can see that we are absolutely up above the 20 and we're up above the 50. We do want to see that 20 cross up above the 50. That'd be a nice bullish cross for us. The 200 days way down there. So we're still in bullish territory for Rigetti. And so that's why I wanted to bring it to you. You guys can see that beautiful consolidation pattern that we have with the highs coming down, the lows coming up. And if we can put in a higher high, that's that break to the upside that we could see. There's the trend lines on it where we actually broke out of the top, retested support, and started that move upward all the way down from 795. So we've already had a significant move, but I don't think that the gas is out of the tank yet, especially because the RSI moving as it has. We want to see that volume supported move sitting on top that 50 SMA is a good thing. And with the EMAs, if I put that up there, we're also sitting on top the 50 EMA as well. So that could serve as significant support for us. And I'll tell you, let me drop the lines on here for a moment just so I can show you this nice and close up in the middle of your screen. The fact that we have this green crossing over the yellow, that's a good thing. Near term bullishness, green over red, also a good thing. Let me take down the simple moving averages for just a moment. If we can get the yellow to cross the red, the 13 to cross the 50, that's a very strong bullish sign. We have the slope to do it where we have a slant upward for yellow and green, get them to cross over red, and we're starting to get in really, really nice bullish territory for a jetty. So RGTI for that, REKR for the penny stock, and BBAI for the penny stock. And so guys, we do have a lot to be hopeful for in the markets. The technicals are there for bullishness. Some excess volume would also be a good thing to really continue to support the moves that we see. We don't necessarily need to see a lot of near-term cooling in terms of momentum, because the momentum is actually pretty darn ripe in a lot of ways. So today could really print out for us. It could move to the upside further. We could move sideways a little bit. Next week's a huge week. That's the one confounding thing that we have is just the preponderance of catalysts that we have next week. Labor market, GDP, and also corporate earnings. There's just a ton coming our way. Today, leading up to the weekend, we could see some profit taking. We could see some positioning leading up to next week. If we get that strong move up today, I think that it makes it even more likely that Monday, Tuesday-ish of next week, we actually start to see a little bit of red in the market as the market really starts to sweat those GDP numbers that are coming out and the labor market numbers that are also coming out. I think that going to be probably just a little bit nervous in the near term. And like I said, you guys, if you want to see my analyses as it comes out before it hits YouTube, over in the Discord, me and the other panel experts that are over there, our joint Discord together. You guys can be a member with those other 1,000 members that are over there already taking advantage of all the products and services that it has to offer, including our buys and sells, where you guys can see how we profit up or down in the market. And oftentimes I like to use options in order to do that, to go long in the market, to go short on the market, you name it. I can use that to build alpha in my portfolio. I can use that to build my cash, so that I can continue to make my long-term investments and add to my overall, my main portfolio, where I kind of buy and hold and just wait, because I'm still sort of young unless you ask my teenage daughters. And now, mind you, that coursework that I mentioned, I got 17 years in education. I have my doctorate in education as well. And I'll tell you what, the courses are the most solid that I've ever seen. So simple, easy, concise, and just powerful with what they can do for you. Links in the description. Use code word doctor when you sign up. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.